Good morning, guys, and welcome to my presentation today. Today, we are going to talk about two basic things. The first one is called savings, and the second one is investment. And we want to see the difference, which one is better to do uh, in the 21st century. And during the discussion of the investment, we are going to put our investment. We are going to use two different platforms for the investment so that we see which one is better again to do with two different. So without much ado, before I don't want to waste too much time here. It will be so brief, but it should be so detailed. So we need to quickly attend to it. So, okay, like I said, we consider the first thing is one, we're going to look at savings, and two, we're going to look at investment. In investment, we are going to look at keeping money in bank by fixing it, and second one, we look for investing in let's say digital assets, because we can see that in this new era, investing in digital assets is the best. It's a new thing and it's making good return for all investors. We are going to this morning, I'm going to discuss this one briefly, but from this presentation onward, we are going to take learn how to invest directly without third party in some digital assets, and in those digital assets, I'm going to show us which one to go, how to pick them, when to enter and when to come out without any problem. First of all, we know that in the olden days, we are talking about investing in stocks. So let me quickly just briefly say something about stock. Investing in stock this is very investing in stock is an olden days things. I cannot advise anybody to invest in stock because one, the stocks is easy to manipulate. Easily, because the owner of the investment, they manipulate the stocks, is what they want us to see. That's what we are going to see. And if you look at the stocks as stocks which we call shares in a company. It has two parts. The first part is they sell private offer, and they sell public offer. Now, the problem or the challenging in these two offers is because the owner of the stocks, the way they they manipulate things is to transfer wealth from the poor to the rich. And I'm going to quickly brief us what is happening here. So we need to understand this because we are going to use this instruction here to we leverage on it when we get to digital asset, because it's happening in digital asset as well, but is easily detected and we can easily avoid them. So one, private offer. Private offers. This one benefits the owner of the company and his associates and why did I say that? Why did I say that it benefits the owner of the company and his or her associate? Okay, I'm going to tell us why. Let's say there's a company called XYZ company, and they want to raise funds from the public, from the poor people. And what they will do is that, first of all, they will launch what they call private offer. Private offer is between themselves and their friends. They can launch private offer that they want to sell 2 million shares to raise funds at let's say 10 cents. I'm going to use cents so that I will use dollars so that everyone watching this presentation can get the understanding. So in all, if they sell, they will distribute this among themselves for them to just create the 2 million shares of the company into the market. Now let's assume that the owner sold 2 million shares at 10 cents per share. So it is going to be able to create 2 million shares. But now this 2 million shares is going to give us $20,000. That means all his friends, they are going to invest $20,000 to create these 2 million shares into the market. After this, they will declare what we call a public offer. And we have to remember that the private offer has already ended. Now it's public offer. What will they do? This public offer now, that is where they use system to transfer wealth from the poor to the rich, because private offer is not for everyone. It's not for everyone. So it's just for the owner of the company and some of his family, friends, and whatsoever. Now what they will do is, now, because it's now a public offer, we are having a public offer now. We are having a public offer now, which is so we know we are having a public offer. Sorry guys. So we are having a public offer now. And now public offer will say, okay, they still have 2 million shares now at 50 cents. We remember that the private offer of the same 2 million shares is at 10 cents, and they have already bought everything. So what is going to happen? All the people buying, all the people that have already accumulated the shares with private offer, they will release it to the public. And remember that when they sold 2 million dollar, 2 million share at 0.1, which is cent, he gave them $20,000. Now, when they now sell the same shares back to the public, which is 2 million of the share at 0.50 now. Remember, this is going to give us what? It's going to give us 2NT, then multiply by 5. This is going to give us 100 here, then 1, 2, 3, 4. Then that means now they raise what we call $1 million from the poor masses. This is what they raise now. Now immediately this $1 million has been raised from the poor people, from the public offer. What would they do? They are going to drop the price. They will drop the price of the asset, of the share, back to 0.10 cents. And remember, at this level, there's none of the private offer holders have any of these shares anymore. So who wants the only people that hold the share of the company at this time are the poor people, and they can keep the price of this share for as low as 10 cents for several years, 5 years, 6 years, 7 years, who knows. So this is how the world economy has been reacting for a very long time, and this is how the wealth has been transferring from the poor masses to the wealthy people every time. It's everywhere in the world. So we as the poor people, or as the poor masses, we are the one that need to get a appropriate education so that we will not be a victim of this kind of events. Thank God for technology. All these things have been taken care of these days using the technology, but still people are still in darkness. They don't know how to approach this. So now I'll quickly go to, this is one of the investment we are talking about, investing in shares. Investing in shares is not more profitable, guys, because of private offer and public offer. Private offer is being sold to the family and friends of the owner of the business at a very ridiculous price, and they dump it to a public who are poor masses to double the price. Already when the poor people are buying, the rich people have already made their profit and they have already walked away from the company. So now they take the asset of the poor people, they fix it down for as long as the owner of the company wants. So that is the first thing we need to look at here. Please, if there's nothing, if anything is not clear, please, you can let me know in the group. So now let's go to another example here. imagine we have like let's say 10,000. Let me use dollar again here. Imagine we have a $1,000. We have a $1,000. We want to invest for 5 years. We want to invest this for 5 years. Then we are going to look at two investment platforms. The first one is investing in bank for 5 years, and the second one is invest it directly into the financial market yeah we are going to take a look at these two scenarios. So but I know the option two, we are there will be question that will be arise if people watch this video, but I'm going to solve the questions in the groups if there's people who doesn't understand how to invest their capital directly into financial markets. But I'm going to talk about this. Now let's assume that banks will give us, we will first of all consider banks here. Banks will give us, I don't know actually what they give now, but let's say 10%, and 10% I'm not so sure that any bank will give 10% per month. Or better still, let's agree that bank is going to give us let's assume that bank is going to give us 20% per annum. Yeah, let's say 20% per annum, which is per year. Now remember, we have $1,000 we want to invest, then for 5 years. Now good. So the first year, year 1, year 2, year 3, year 4, year 5, we are going to get here 20% of let's say 20% times 1,000. 1, 2, cancel 1, 2. That is $200. The first year $200, second year $200, third year $200, fourth year $200, fifth year $200. Yeah, we are is without compounding. We are not compounding anything here. So in 5 years, in 5 years we are going to get another $1,000. Another $1,000 as a profit. So after 5 years, we are going to get 100% of our return over investment, ROI. So now good, we can see that after 5 years we got so much. This is how banks still work for us. So now let's look at the second option. The second option, I'll quickly just brief us, is not a detail because As from next week, we are going to be running detailed information, and we are going to choose the second option. Second option, we want to invest directly to the financial markets using the recent 21st century, and we are going to use the same $1,000 we invested in bank for same 5 years. You see, guys, what I want to show us here is real, is very, very real. But if you do, many of us don't know how to do it. Many of us don't understand the approach, and many of us have been duped, seriously duped. So they have been seriously duped because they don't really understand, and they don't first of all acquire knowledge. They are just running after the wicked people that doesn't have the love of developing them than to exploit them. So let's come here. Five years ago, I won't take a popular asset here, which is Bitcoin, and this is a financial market of its own. And if you look at it here, let me do something. Yeah, as of today that we are doing this, that I'm doing this thing, that I'm showing us this. If you look at this area of our screen, if we look at here, there are information there, which I will try to explain it further in the further lectures. But if you look at this place, I want to talk about this place. I'm circling now. This is a financial market of how much? This is 1, 2, 3. This is $242 billion investment, financial markets. So it's not more market. So everybody can make their own cuts from this market at any time you want, but you need a very solid understanding how it works. And from next week, this is what I'm going to be busy explaining, and I want a lot of people to ask questions so that you will be able to understand how you can leverage on it. This is the best way to improve your financial stability in 20th century. Now, what I'm going to do now is I'm going to go to pick out of the 5 best assets: Bitcoin, Ethereum, Ripple. Okay, I'm going to stop at Ripple. Well, let me click on it and do the same analysis I did for us. I think Ripple is up to 5 years. Okay, we will check. Good. So now we come to historical data of this asset. We want to see what will have happened if we put our money on this asset 5 years ago. 5 years ago is 2014. I'm not sure Ripple was alive 2014, but let me just try to prove a point. If it's not there, we choose asset that was as existing as at 2014. Or this is 2019. Good. Good. Ripple was launched in 2014. This is one of my favorite assets. It was launched in 2013. Okay. We are not going to use 2013 because we said 5 years investment, so we don't want to cheat with what we had with the bank. So 2014 January should be something here. So 2014 January, you can see here, this is when we're supposed to invest our $1,000. Now let's do some calculation. Let's say in 2014 in 2014 we know about digital assets to invest on, and look at January 2014, January 1st, one of this coin is sold for 2 cents. You can see it's 2 cents. Let me show us. You can see here, this is the price, this unit price of this coin, and we bought it with our $1,000. So let's see what will have happened to us today. We have $1,000 to invest for 5 years, which we have done with the bank. Then we divide this by 0.027365. Yeah, we are going to buy 36,543 quantity of Ripple 5 years ago. Now, okay, now having known this, let's see what is going to happen. 5 years will end here, which is January 2014, January 2015. It should be able to end somewhere here. Let's just do approximation. Okay, let me be very virtual with us. Let's go to January 2018. January 2018, that is when we want to liquidate our investment, and we want to see, and January 2018 will be 4 years. Yeah, January 2019, sorry, it will be 4 years. And let's see what is the price of the same coin. This is January 2019. January 2019, which is this coin gave us, is been selling for 35 cents. You can see this is the price. So now this is the quantity we bought 4 years back. Then this is the price today. We multiply this by 0.352512, and what do we see here? We get $12,000. We get $12,000. We get 12,000. Sorry. So these are what we get as a return, which is $12,881. $12,881. That is what we got. Okay, now let's go back to our drawing board where we do our analysis. In 5 years, 5 years keeping money in the bank. Where is it? In 5 years keeping our money in the bank, we got another $1,000. But now, with example of what I did now, which is our second option, we can see that in January 2014, we used the same $1,000 to buy digital XRP, and January 2019, which is 5 years, the same $1,000 gave us $12,881. That means we make a profit of $11,881 for real. This is the main reason why information is very important, guys. We have seen there's nothing hidden. Yeah, this is historical data. Everything else is historical data. Should be, in case you are doubting me, I'm going to show us another historical data of real money that we have been spending. You can see I didn't formulate it, it's real. And if you look at this asset, since when they launch it, if you are few of the lucky people that join this asset, you do it yourself. Don't let anybody come and don't give your money to anyone. Don't let anybody come and tell you, come and buy this through me, what. No, this is not a networking investment. This is not getting commission investment. This is a trading, and this is not a forex trading. I'm still going to come to tell us about forex trading in future. I trade forex, but this is the best investment in 21st century for anybody who is willing to acquire the knowledge and you start using your hand to improve your financial stability. If you look at this coin, since when they invented this, since when it comes to the market and as available for people to use, people that jump in time has made 4,974% profit. This is where the information is. This is how powerful the information is. This has changed people's life. For the past 5 years, people that ask the information, they know how to do this. There's no referral bonus here. There's no IB commission here. You just have to learn it and you do it. Okay, let me now go back to, let me quickly show us before I'm going to stop here very soon. Let me show us the same principle in the real money. Yeah, you can trade real money the same way I invest in .com. Yeah. Good. Let's look at here. I'm going to look at South African rand and dollar. South African rand and dollars, which is USD, US dollar. Okay, here we go. So if you know how to check in historical data of financial instruments, you don't need anybody to tell you anything. You can make as much as possible money in your room without going through a broker. You don't need a brokerage firm. You don't need any forex broker. I wish I could be able to let us see maximum monthly. I'm looking for historical data of this asset, of this money. Okay, yeah, this historical data here. Okay, or lately I realized that they didn't want to refill all the data again, but I'm still going to use. I'm still going to show us something that will give us information that we need. I'll just do everything possible to make sure I give it. Okay, let me see here. Monthly? No, I don't want monthly. Okay, let me come here. Let's say max. We can still use okay, indices, commodity. We don't need indices. Let me say commodity, crude oil, no. EFT, crypto. No, we don't need crypto. I need real money. I need real money. Forex rate, okay. I need real money. Forex rates. This thing has been messed. I need real money. Okay, this is forex here. I'm not looking for 5 minutes. I just need to show us that it's just an information that we don't have, that is making us to be exploited. Okay, let me come back to South Africa rand. Let me see amount data. This one amount data. Okay, now I can use this at, can I use this? This is dollar USD. Let me use USD ZAR. I'm sorry because this is not a USD ZAR. Let me see what is going to give me, the way it's going to arrange it. Let's look for monthly data. Good. I think this one is giving me a little bit towards what I want. Now let's look at a rand. I'm going to explain this, and I'm going to still explain it in error. Let's look at rand. This is January 2010 to 2019. What happened to rand? Okay, let's say in 2000 okay, let's use 2014 to 2019 like we did for that, so that we justify our calculation. This 2014, we can see here that 1 rand. I just want to capture this so that we see, all of us will see. You can see here in 2014, where is it? January 2014 is here, somewhere here. And if you look at it here, we will see the price here. So let's watch it. So this January 14, and 1 rand is 10. You have to look at it critically so that you can get what we are saying here. 1 rand is, $1 is $1. I mean, $1 is 10.7587. That is $1. I mean, $1 to rand in 2014. Now let's quickly do, and okay, before we do anything, this is 2019. How much is $1? $1 is 14 rand 6329. So now what we want to do is that, okay, now having getting this information, what we want to do here now is let's cancel this. Let's delete this. Cancel this. Okay. In 2014, remember we have $1,000. So how many rand do $1,000 made that time in 2014? That means we are going to multiply this times 10 rand 0.7587. That means we have 10,000 10,758.70 rand. So let's come back to our drawing table. I want us to see how powerful information is. Let me quickly go to something. Let me open another new whiteboard. So, okay. Now that means, let me quickly do something here. That means in 2014, $1,000 is equivalent to 10,758.70 cents. That means anybody who have this amount of money that time will be able to buy $10,000. Now, let's say you know how to get this money. You know how to convert your rand to dollar in 2014. So now your $1,000 in 2019, what will it give us? And remember that we should remember that we are not, okay, now in 2019 a dollar is 14.6329. so definitely at this year, if you keep your money in 2014, you keep it in dollars, which is equivalent to 10,700 something. Then let's see what is going to give us now. With your $10,000 multiplied by 14.6329. So you are going to get 146,329 rand. Okay, now let me go to the drawing board and explain this. Let's go to her. That means this year, that means in 2019, your $1,000 you invested in 2014, which is here, is going to give us 146,329 rand. So what are we saying here? What is the interpretation here? That means your 10,000, what you are going to buy 10,000 rand in 2014, you are going to use 146,000 rand to buy it. Can you see how deadly it is for you to save money? Let's say you save this 10,000 rand in a bank, in a big piggy bank in your room, or you save it in a bank in your savings account without investing it. This money has depreciated. That means it cannot buy anything again by 2019. And that means people that are working with government, that are taking a pension after 25 years, after their 25 years of working, let me see, after 25 years of their hard labor, the money they were going to give them, the pension they are going to collect, is nothing again, because paper currency has failed. It has seriously missed it. So that is why we need to know, we need to acquire all this knowledge. The same thing applicable to Naira. If I want to use Naira, you can see the way I analyze everything for you. You can practicalize it on your own. And this is the way I'm going to stop today. It's just an eye-opener. Starting from next week, we are going to be seeing how we have been doing this thing and how we can do it personally. And you keep on increasing your money. You keep on increasing your fund yourself without going through third party. And how do you pick a digital asset? Why should you invest in it? How do you put a portion of your money in a part of in a particular asset? All these things will be discussed starting from next week. Until then, bye bye guys.